With healthcare reform unresolved in the Senate, we wanted to take a closer look at healthcare stocks and what impact the debate may be having. With us now is John Sullivan. He's a healthcare strategist and director of equity research at Leerink Swann Co. Mr. Sullivan, welcome to Bloomberg News. Good to see you.
Thanks very much.
Our Suzanne O'Halloran was talking about that healthcare debate. You expect the healthcare sector to outperform in 2010. Tell us how that sector is going to perform whether or not healthcare reform passes. Is that going to have any impact at all?
Thanks very much for having me. Healthcare reform is still an important part of the healthcare sector, although we're moving toward resolution. We think at Leerink Swann we're going to get a relatively benign form of healthcare reform signed into law. The next highest probability solution is one where you don't get anything signed into law, and that's definitely good news for healthcare stocks. So
why?
Because in either case, uncertainty is removed regarding the healthcare reform issue. That's good news for healthcare investors.
Attractive relative to earnings growth next year? Is that what you're seeing as well?
A couple of things. Healthcare is starting 2010 at a relatively attractive valuation versus the overall market at about a 30% PE discount. Healthcare is going to see good earnings growth through 2010 as it did in 2009, so both on earnings and on valuation.
And we're also seeing, if you can see the chart there too, that spike up in the S&P Healthcare Index right now year to date up just about 16% there. Is anything that you see driving the healthcare sector forward right now, even as that debate is ongoing?
Sure. Resolution in healthcare reform, as we get closer, is driving healthcare stocks in and of themselves. The overall stock market up closer to 22%, so healthcare continues to lag the overall market. We think as healthcare reform gets resolved, healthcare can make up some of that difference that we've seen this year.
Well, it's interesting because one of the things that's central to the healthcare debate is the high costs in the industry, which affect not only people who are buying healthcare, but also the healthcare companies themselves. So how is that playing into the earnings outlook for these companies right now?
Sure. I mean, traditionally, healthcare product providers have been able to pass on costs of manufacturing, costs of R&D pretty well into the healthcare system. That's been part of the good news for healthcare stocks over time.
Something else I want to ask about that's specific in the bill here. There's a provision I'm hearing from our Lizzie O'Leary in Washington that mandates insurers who participate in these exchanges spend a certain amount of every premium dollar on medical care. And this is something that the insurers obviously would be watching very closely. How important do you think that is, and what's sort of the break-even dollar amount if they did have to spend a certain amount of premiums on care?
Sure. We think it's actually relatively unlikely that you'll see a provision like that actually signed into law. We think that that's tantamount to really turning the managed care and health insurance industries into something closer to a utility. We think that's actually pretty unlikely in this Congress. Managed care companies do a good job of providing care, and their medical loss ratios in the 80 to 90% area are fair within the context of broader industry.
What happens if nothing gets passed?
If nothing gets passed, two things happen. I think that if nothing gets passed, it's a tremendous defeat in Washington for Obama and for the Democrats in Washington. I don't think that what happens is we come back to it next year or the year after. I think that this was the shot.
You really don't think that this is something that can be revisited if it fails this time around?
You know what? I think this has been pretty exhausting to Democrats in Washington and to Obama. And if we don't see it now, don't forget, we have elections coming up in November 2010. Traditionally, Republicans gain, traditionally the party that's out of power gains a lot of seats in the midterm elections. I bet you in 2011 we're going to see a lot more Republicans. Healthcare reform gets more difficult.
Well, I mean, all of this said, right now, with what we know now about what's going on, how likely do you think it is?
I think it's very likely we're going to see something signed into law that's called healthcare reform. I think it remains Obama's #1 domestic priority, and I think he's willing to cut the deals to get something done.
Okay, so given that scenario, what sort of sub areas of healthcare are going to do the best going into 2010?
As we go into 2010, I think that investors have been underinvested in healthcare generally. I think as they come back, they'll come back to some of the larger capitalization sectors of healthcare. They'll come back to large cap pharmaceutical companies that have tremendous certainty of earnings. They'll come back to large biotechnology companies and even to managed care.
Any selected names?
In large cap pharmaceuticals, Pfizer and Merck. In large cap biotech, there are several names, including Gilead and Genzyme. And then in managed care, we like WellPoint and Cigna best. Just
very quickly here to ask you about the large cap pharma. We've got a lot of acquisitions that are being integrated there. How do you think Pfizer and Merck are going to do?
You know what? The acquisitions were actually good news for Pfizer and Merck, and really for investors that are coming to the sector. There's no higher certainty with respect to earnings in the entire healthcare sector over the next several quarters than Pfizer and Merck, because they're in charge of their cost-cutting programs.
Okay, thanks a lot so
Nice
much for coming in.
Thank you.
John Sullivan of Leerink Swann.